Hello, my name is Yuya Shimizu, and I am the Chief Investment Officer of Hibiki Path Advisors. Thank you for coming to this web and listening to my commentary about Mandom today. But before that, I'd like to explain a little bit about Hibiki Path Advisors. We are a investment management company based in Singapore, and we invest into small to mid caps in Japan. We are a value investor, but at the same time, we look for a quality in the business we invest with. With that said, the company must be cheap on its stock price for various reasons. And then, side by side with the management, we try to solve that together and create value together for the shareholder of the companies and, of course, for our valued clients. So today, I'd like to talk about Mandom's management buyout that was announced after close on 10th of September. We have been invested into Mandom since July of last year, 2024. And we have been engaging with the people within Mandom multiple times until now. And we've been encouraging them to act more dynamically, to advertise themselves, to let the market understand their values. We own a small percentage of the company at this point, and we continue to be extremely excited with the future of Mandom. So, the reason of today's presentation are twofold. One is that we would like to explain our understanding about the announced management buyout by the founding family of Mandom, the Nishimura family. And the second point is that we want to introduce the questionnaire that we sent to the board and special committee of Mandom, because we think some important details are missing in the documents that describe the interaction between the purchaser and the special committee. But before that, let's start again from the basics of Mandom. So here in slide 5, we see a lot of their brands. If you come to Japan, you will see in almost 100% of the convenience store the products of Mandom. The most famous, obviously, is a brand called Gatsby. The other brand is Lucido, which is being used by slightly more older men. But with that said, Mandom also does women's cosmetics as well. Lucido L, Bifester, and in Indonesia and Southeast Asia, they have Pixie, also Bifester, sold in Indonesia, and in Malaysia, Silky Girl is very popular. More recently, they have started a higher-end brand called Aono, which I am a loyal user as well. With that said, let's go into Mandom's basics. So Mandom has been founded in 1927 with the company name Kintsuru Perfume. In 1970, the new brand, Mandom, became a big nationwide hit. And nimble management actually thought a good idea to change the name of the company to Mandom. In 1978, a very popular brand, Gatsby, started. Now, in Japan, it has more than 50% market share of hairstyling products for men. And for all the cosmetics products in Japan, they have 25% of men's cosmetics market. The revenue this year forecast is in US dollars about 570 million. Operating profit about 24 million. And current market cap, actually after the TOB tender offer has been announced, is about 630 million US dollars. Actually, the closing price of 12th of September, which was last Friday, is 2,053 yen. This is actually 4.7% higher than the tender offer price of 1,960 yen. Simple valuation based on this closing stock price is price to earnings of 16.9 times, price to book of 1.2 times, and EV/EBITDA of 5.9 times, all based on March 27 profit estimates. If I may touch on one more things about the valuation, slide number 7 is the comparable valuation. You can see that Mandom current valuation is not high compared to the industry. The average EV/EBITDA, which is, as you know, used in a lot of M&A and tender offer metrics, is more than 8 times. And after this deal was announced and stock price actually went up around 30%, EV/EBITDA of Mandom still remains at less than 6 times. And we don't believe this is expensive. Here in the next slide, 8, I would like to remind you that we have sent a proposal letter in March this year, which is disclosed in our website. In this letter, we've mentioned to the management that we believe Mandom's intrinsic value is more than 3,000 yen. At the time, when stock price was only about 1,300 yen as of March. So we thought there was more than 100% upside. An extremely undervalued company. And for the reason of such undervaluation, we pointed out their excessively conservative balance sheet management as one of the cause. On top of that, we made 4 actual proposals to the management. One is to show the brand story of each of the brands more aggressively than now. Second is to convey their strategy, how they succeeded in Southeast Asia, to the investors, because they have a certain differentiating points. Third is to offer more incentives to their boards and to the executives, as well as the employees. Because we believe their stock price is very cheap, and the employees and management is working very hard to increase the value. And fourth is the good old return on equity. We have urged that they should aim for more than double-digit return on equity and build their capital discipline based on that. If you are interested, we have put the link here, so please read into this proposal letter later if you have time. So here from slide 9 is the main part of today's presentation. There's a lot of details in the announced managing buyout by Mandom, but I would like to outline 4 key points here. One is the value. The 88.5 billion yen of the total market value priced with 1,960 yen tender offer price. Of that, 53 billion yen will be financed through a loan provided by MUFG. This is around 60% loan to value, which is reasonably good loan to value in my view. With that, the valuation multiple of this tender offer price using the March 2027 forecast is price to earnings of 16 times, EV/EBITDA of around 5 times, and price to book of around 1.2 times. We don't believe this is extremely rich at all. The second point is about the ownership structure. So currently, the founding family, Nishimura family, holds about 12 to 13% of the whole company in our estimates. And reading the documents, they are expected to hold 33.4%. And Chairman Mr. Motonobu Nishimura and President Ken Nishimura will keep running the business, also with 1/3 of the board to be nominated by the founding family side. So they will have the veto power here. The third point, they are partnering with CVC Capital Partners, a prominent figure in the private equity space. CVC will provide 66.7% of equity capital, and they, with the management, founding family, aim to go public again within 3 years. So this is a pretty aggressive, proactive management buyout. The fourth point is more technical. Although this is already announced, this is still the pre-tender offer stage. Tender offer will start somewhere stated in the document late September, subject to obtaining the clearance under Vietnam's competition law. So here, it is just that tender offer, the plan has been announced. So with these key 4 points, I would like to make 3 comments representing Hibiki. The first one, very important. We agree that there is a genuine strategic rationale behind doing this proactive and offensive MBO. The founding family want to grow the business further, and in order to do that, they really need to restructure the business, and that's very risky, and they want to take the company private. So this is not like defensive or they just want to protect the business. They're really trying to transform Mandom, which I think that is a good reason for going private. And I want to praise that courage and determination by Mr. Nishimura. The second point is about the transaction negotiation that has taken place for nearly 6 months before this deal has been announced to public. So the board of directors and the special committee members negotiated the price with CVC and the founding family. And basically, I appreciate their strong effort to raise the price for 7 times before being announced, from 1,600 yen to 1,960 yen. However, we do have several questions after reading the documents about the details of the procedure, and we have sent a letter addressing these questions. The third point is about the price. Clearly, we feel this is insufficient in reflecting the company's intrinsic value. So here in slide 11, I would like to start talking about the price. So this slide is very interesting. We brought this from the material that Mandom company itself has used in the March 2025 fiscal full year explanation. This slide was added from this year, and you can see that they are outlining their issue about the discount of share price and addressing it that they're gonna raise return on equity and raise price to earnings ratio and target 3,000 yen stock price in 3 years' time. So actually, we thought this was very positive. We like the fact that they are saying this to shareholders proactively and aiming very high. Then we saw the stock price of this tender offer set at 1960, which is a big difference from 3,000 yen. And there's no real explanation about this difference in their documents anywhere. So this was the starting point of having some doubts about this tender offer price. And then looking into the document in detail, we came up with these 4 detailed questions that we would like to address to the board and special committee of Mandom. The first one is actually the fact that we appreciate actually the hard negotiation that special committee has done for shareholders. We acknowledge it and we thank them for being hard on this negotiation. With that said, at the last moment, we saw in the document that the special committee has counter-proposed 2,100 yen. And next day, the bidder, CVC and the founding family, raised their offer price from 1950 to 1960. Then they agreed on this price. There are some explanation as to why they agreed, taking so much time, and the room for upward revision from here was scarce. But we would like to hear more details about why they agreed so quickly after proposing 2,100 yen. The second question is about the DCF-based valuation. So the special committee document mentions that the management side and the special committee side, they have different financial advisors. The management side is Daiwa and the special committee side is Plutus. And they claim that both of them have used the same midterm plan provided by Mandom. But if you read into the detail, the free cash flow assumption of those two financial advisors are very different. And of course, using that free cash flow assumption, the valuation range of this DCF-based approach is extremely different by the two financial advisors. They claim that they use the same financial figures, but they don't really explain why such difference in the assumption of free cash flow. We would like to know why. The third point is about the method of this equity valuation. In this transaction, the market price method and DCF method, as we discussed, were used. But in many cases, more than majority of the cases, the comparable company analysis method is also used, using EV/EBITDA. This was not used for unknown reasons, and we want to know why, because it is not explained in any of the places in the document. The fourth question is that the tender offer document states that this tender offer price, TOB price, does not incorporate any of the expected synergies arising from this transaction. And the reason is being mentioned that it is very hard to quantify it. We do understand it is very hard to quantify it, but in the M&A guidelines announced by the METI a few years ago, they clearly state that in order to take the company private, the purchaser should provide some or share some of the synergy value to the seller, which is the existing shareholders. And in this transaction, deliberately mentioning that synergies are not being incorporated, we are unsure why that has been the case here. So with that 4 questions in mind, we have written a questionnaire letter to the board and special committee of Mandom raising these issues. And we are disclosing it to general shareholders so that people understand what may potentially be the issue. With that said, moving on to slide 13, this is the summary of what I wanted to mention today. So very simple 3 points. One is that we do acknowledge and praise the founding families doing this offensive, aggressive, and proactive MBO, so that they want to grow the company, transform the company, and become a great company, making a lot of values and profits for their customers and to the country. We like it, we endorse it, and we like to encourage the management. However, as mentioned, we are not happy with the price of 1960 yen. Then, we have some questions regarding the procedure between the purchaser and the special committee, and we sent the letter of questionnaire to them. So here, we wanted other shareholders, and of course, I'm speaking in English, foreign shareholders, to sort of see what are the potential issues here. You can see that the stock price after the announcement, the Friday close is 20,000 yen, 2,000 yen and 53 yen. Nearly 5% above this tender offer price. So this actually sends a message, and we have the same view. So I will stop here. Thank you for listening. If you have any questions, or if you want to discuss about Mandom with me, please don't hesitate to send the email to the info address of Hibiki. I will be happy to discuss with any like-minded shareholders or interested shareholders. Thank you very much for listening to me today, and hope you have a wonderful day or evening. Thank you. Bye-bye.